We're on the NYSE trading floor with our Jim Cramer, who's here to answer your Twitter questions. Jim, let's start with the market. Jason points out that you've stated we're in a bear market, be cautious for a while, but we won't see a 70% drop like in 2011. So what kind of drop should investors watch?
Well, I do think that the stock market at 17.5 times earnings, the S&P could fall to 15 times earnings. That would mean that we could go down. We could go down 6-7% without a problem. I think that there are a lot of people who feel that I'm a cheerleader for the market, and I've actually not liked the setup for ages. I'm waiting for stock prices to break to the point where people say, you know what, I'm just going to take advantage and start buying. We're not there yet.
All right, Jim, as you know, Hillary Clinton made some comments on pharmaceuticals yesterday. Any real long-term impact on health stocks?
Well, I think that one of the things that we're going to have to deal with is that this is going to be something that's going to be your platform. Now, I think you get short-term hits and then the stocks go back, and then she hits them again. And that's been her way of being able to stay on message. Her message is that drug companies are what you beat up on. And so I would be careful and recognize that the stocks do not reflect her negative opinion yet.
Any stocks in particular you would look at in light of an environment where these discussions might come up more?
Well, I think that you want to do is always take a look at Eli Lilly. They've got not one but two blockbusters. And I think that when you look at the diabetes formulation, their Alzheimer's formulation, that's the one to buy. It is up 26%. That's the one that's going to bounce back the most. Secondly is Bristol Myers because it has an anti-cancer formulation for kidney cancer. I think it's very valuable.
All right, Jim. What about Verona? Will the new EMV requirement be a catalyst for that company?
Well, I'll tell you, Ron, I thought it would be, and it's not worked out yet. This is an example of a stock that is part of what I regard as this bear phase. It's done very well. The last quarter was very good. The EMV, it should be a spur to sales. It should do well, but it's just not impacting things. It's almost as if you're not in a General Mills kind of name, you're going to lose money right now.
That brings me to Netflix, buy, hold, sell.
Right, Netflix, I have said historically every time it is below where it reported that last good quarter, 94, 95, you should buy it. Bruce Kamich, who's done some really interesting and negative technical work, has a piece out today on Netflix, and it's a must read.
And Jim, what about Freshpet? Will it have positive earnings in the coming quarter, do you think?
You know, I felt that when the company came on last time, I felt that they tried to acquit themselves well, but the publicity's been bad. And I think that if you want to own pet food, take a look at the Smucker secondary, because they're doing a giant secondary of a company that they bought that is pet food.
All right, Jim Cramer, thanks so much. Remember, send your Twitter questions to Jim at #CramerQ. I'm Rhonda Schaffler for The Street.